Hello everybody, it is the Naughty Investor here coming at you with another video. In today's video, I wanted to talk about accredited investor laws and why they are bad. Now, when I started studying economics, before I did that, I was mostly in favor of government regulations. This was probably when I first started researching economics and monetary policy. Before that happened, I was mostly in favor of government regulation. I wouldn't say I was pro-regulation, but I was kind of like, all right, yeah, there's some regulation that is needed, whatever. And the more I looked into a lot of regulation, the more I realized the negative effects of it, okay? And one of the major negative effects is a lot of the time, large businesses will use the government regulation to keep out their competition. This is called corporatism. It is not free market. It is when a big business seizes parts of the government, whether it's through bribery or whatever, and uses the government's power to keep their competition out of the market. Now, in the investing world, the biggest piece of regulation, in my opinion, is the accredited investor law. Now, what this law does is it makes it so to invest in certain companies, usually startups, private equity offerings, anything like that, ICOs as well. ICOs are going to fall under this as more regulation comes forth. It makes it so the only way you could invest in these private equity sales and ICOs is if you have a large net worth, all right? And it depends on which one, but anywhere from $250,000 to $1 million is what I have read. It really depends on jurisdiction as well as what how the company's operating it and whatnot. But it makes it so you have to be a rich person to invest. And a lot of people are like, well, that's just for risk. That is just to help people not make mistakes. But here's the reality. People are responsible for their own money. And what these regulations do is they prevent consumers and everyday people from investing in the next big thing. It prevents it. It only allows the super rich to invest in these private equity sales and ICOs and whatever. And to me, that's unfair. To me, I understand the argument of, well, your average day person doesn't understand a lot about investing. That's what they'll say, but that's very elitist. And also, it's your money. You have the right to invest it in what you want, in my opinion. And accredited investor laws are probably the biggest sham in the regulatory framework when it comes to investing. And it really prevents a lot of people from investing in startups that could 10x, 20x, 50x, whatever, as well as ICOs. And I think what we should advocate for is a repeal of these laws, or at the very least a lower bar, maybe cutting the requirements in half so at least upper middle class people could invest in it. But honestly, accredited investor laws are a huge sham, and I think it's preventing a lot of great people from investing in companies and ICOs and projects that will eventually be worth a lot of money. Of course, there's a lot of risk involved with private equity sales in small cap and startups. There's a lot of risk involved there. Don't get me wrong. But with a lot of risk comes a lot of opportunity. And I think accredited investor laws are a huge sham. Inbox Dollars allows you to earn extra money doing paid surveys in your spare time. Use my link below in the description and you will earn a $5 bonus for sign up. Do not miss out and be sure to use my link.